Hey, real quick. So, you know how side hustles have basically become the way that Gen Z and millennials stay afloat? Whether that's driving Uber or tutoring online, selling on Etsy, flipping sneakers, or posting affiliate links on TikTok, or taking random Cash App payments for whatever they can. Because let's be real, a 9 to 5 doesn't even cover rent anymore. But here's the update that nobody's talking about. Starting this year, the IRS made a major change. If you earn just $600 through the apps like Venmo, PayPal, Cash App, Etsy, eBay, Depop, whatever peer to peer, you're now getting hit with a 1099K tax form. Not $20,000, not 200 transactions, just $600 total. That's not a typo, and yeah, that changes everything. If you made a few bucks selling stuff online, ran a quick tutoring gig, drove Lyft a few nights, you charged someone for freelance editing or digital art, guess what? That's now taxable. So let's break this down, and more importantly, what you can do about it. So what is a 1099K? Well, here's a quick version. A 1099K is a form that tells the IRS, hey, this person made money through this app. It's kind of like a W-2 for your job, but instead of a salary, it shows third-party payments from platforms like Venmo, Cash App, PayPal, Etsy, eBay, Facebook Marketplace, StubHub, maybe even Ticketmaster if you're like reselling tickets. And if you made $600 or more in a calendar year, even from just a few sales, you're likely going to get a form. And now you might be thinking, all right, but what if my friend just paid me back for dinner? And that's a good question. So the IRS says that this only applies to business transactions, like selling stuff, doing work, or providing whatever service. But sometimes these apps don't always know the difference. So if you got paid through a business profile, or you accepted a bunch of random payments with like the money emoji in the notes, you might still get flagged, which is exactly why this matters. We live in a peer-to-peer economy. We're not mailing checks, we're not walking into banks anymore. We're sending quick cash for gigs, splitting the rent, or whatever side hustle that we can come up with that week. And now, Uncle Sam wants its piece. It's not just annoying, it's a shift in how our income is treated. We've been treating our side money like extra cash, but the IRS is treating it like a business. So if that's how they're moving, it's time that we start moving that way too. So let's get practical. Here's what you do now, not next April when you're panicking with TurboTax open and no clue what's happening. Step 1, separate your accounts. If you're side hustling, even if it's just casually, use a business profile on Venmo or PayPal. These apps literally have settings for this. Business stuff goes in one lane and personal payments go in another. The clean separation equals cleaner taxes. Step 2, track your money. Every dollar you make, every tool you pay for, every mile you drive for Uber or Lyft or DoorDash, track it. Use a Google Sheet, use your iPhone notes, use whatever app, whatever keeps you consistent. Step 3, learn your write-offs. Here's the silver lining. If the IRS is going to treat your hustle like a business, then you get to use your business for deductions. Stuff like mileage on gas, even your laptop, ring lights, phone holders, editing apps, even your Wi-Fi if you work from home. If you made $2,000 freelancing, but spent $800 on gear and gas, then you're only going to get taxed $1,200. That's a big difference. Step 4, file correctly. Most hustlers will find a Schedule C during tax time. That's where you list your income and expenses. And if you made enough, you'll also owe self-employment tax. Basically, you're covering your own Medicare and Social Security. It sounds scary, it's not fun, but it's not that complicated once you break it down. Step 5, plan ahead for next year. If you're pulling in money consistently from your side work, not just a one-time gig, you might owe quarterly taxes. That's right, pay-as-you-go taxes, like a real business. It's annoying, but it saves you from a surprise $3,000 tax bill next spring. You can use online calculators or apps like QuickBooks Self-Employed to stay ahead of it. Now, let me be honest with you for a second. This feels like one more way the system goes after people who are trying. We're not billionaires hiding money offshore. We're not big corporations dodging taxes with loopholes. We're the ones trying to get ahead, trying to survive, trying to build something from nothing. So yeah, it stings, but it's also an opportunity to level up. Stop thinking of your side hustle as just a side thing and start treating it like your first business, because that's what it is now. Look, if you're just starting out, I know some of you just sold a few hoodies or shoes online. or did a freelance gig here and there. This doesn't mean that you need to become an accountant overnight, but it does mean that you should be organized, keep your receipts, and save a portion of your money for taxes. Don't assume that it's just a few $100 means that you're off the hook. Trust me, if the IRS thinks you owe them money, they will find you. They do not play around. This isn't just about the 1099K. This is about building a new kind of financial future. One where you know how your money works, how to protect it, and how to grow it. Because here's what the real entrepreneurs do. They track their money, they write off expenses, they reinvest their profits, and they plan ahead. And you can do that too. No LLC required. Just a little structure, a little knowledge, and a shift in mindset. So if you ever felt behind or confused or overwhelmed by all this stuff, you're not alone. I'm figuring it out right alongside with you. So here's your next move. Clean up using some apps, start tracking everything, learn what you can write off, and don't wait until tax season. This stuff can be confusing, but you don't have to figure it out alone. So if you want to learn how to build wealth the ugly, real, and messy way, this channel's for you. You've got this, and I'll see you in the next one.